Welcome to the channel, your go-to source for financial culture content. Today, we dive into the fascinating story of Nicholas Darvas, a dancer-turned-trader who made millions in the stock market using a technique known as the Darvas Box Theory. Darvas's journey is a testament to the power of unconventional thinking, discipline, and persistence. Nikola Darvas was born in Hungary in 1920, and his early life gave no indication that he would one day become a legendary figure in the world of finance. After studying economics at the University of Budapest, Darvas pursued a career far removed from the stock market. He became a professional dancer. Along with his sister Julia, he formed a dance duo that achieved considerable fame, performing across the globe in prestigious venues. It was during one of these tours in 1952, while performing in Toronto, that Darvas's life took an unexpected turn. He was offered shares in a Canadian mining company as part of his payment, which sparked his interest in the stock market. Darvas's initial foray into trading was far from smooth. Like many beginners, he experienced losses and frustrations, primarily because he was following the advice of others rather than relying on his own analysis. However, Darvas was not one to be easily deterred. Drawing on the discipline and focus he had developed as a dancer, he began to approach trading with the same intensity, dedicating himself to studying the markets in depth. He pored over financial newspapers and studied the movements of stocks, gradually developing a unique approach to trading that would eventually make him a fortune. The breakthrough came when Darvas noticed a pattern in the way successful stocks moved. He observed that stocks often traded within a certain range, forming what he described as boxes. When a stock broke out of its box on high volume, Darvas would buy, confident that the stock was set to rise. Conversely, if the stock fell below the lower boundary of the box, he would sell, thereby minimizing his losses. This simple yet powerful strategy became known as the Darvas Box Theory, and it would go on to make Darvas millions of dollars. What made Darvas's method particularly remarkable was that he was essentially a part-time trader. He continued to travel the world, performing in shows, and would send his buy and sell orders via telegrams from different countries. This physical distance from the market allowed him to maintain an emotional detachment that many traders struggle to achieve. Darvas ignored market rumors, news, and tips, relying solely on the price action and volume of stocks. This disciplined approach helped him avoid the common pitfalls of emotional trading and stay focused on his strategy. In 1959, Darvas published his now famous book, How I Made $2 Million in the Stock Market, which detailed his journey, his method, and the psychological aspects of trading that he believed were crucial to his success. The book became an instant hit, resonating with both novice and experienced traders. Darvas's story was inspiring not just because of the money he made, but because he showed that one could succeed in the stock market without being a professional trader or having insider knowledge. His method was accessible, based on observable patterns rather than complex financial models, and his success demonstrated the importance of discipline, strategy, and psychological resilience. Darvas's impact on the financial markets was significant and long-lasting. His method challenged the prevailing wisdom of the time, which heavily favored fundamental analysis. Instead, Darvas demonstrated that a purely technical approach, focused on price and volume, could yield substantial profits. His strategy of buying strength and selling weakness became a fundamental concept in technical trading, influencing countless traders who followed in his footsteps. Over the years, the Darvas Box Theory has been both praised and critiqued. Some traders have found great success using the method, while others have struggled to replicate Darvas's results. Nevertheless, the core principles of the Darvas Box, identifying trading ranges, buying breakouts, and managing risk, remain relevant to this day. The method's simplicity is its strength, allowing traders to focus on the key elements that drive stock prices: supply, demand, and market psychology. One of the most remarkable aspects of Darvas's story is how he maintained his independence from Wall Street. Unlike many successful traders who worked within the financial industry, Darvas was an outsider. He was self-taught, relying on his own observations and analyses, rather than the advice of brokers or financial advisors. This independence not only protected him from the biases and pressures of the financial world, but also allowed him to develop a unique perspective on the markets. Nikola Darvas continued to trade successfully for several years after the publication of his book. However, as the markets evolved and new strategies emerged, he gradually withdrew from active trading. Darvas's story, however, did not fade into obscurity. His legacy has endured, with his book remaining a popular read among traders and his methods still being taught in trading courses around the world. In summary, Nicholas Darvas's journey from a world-renowned dancer to a successful stock trader is an extraordinary example of how passion, discipline, and an analytical mindset can lead to success in unexpected areas. His contributions to the field of trading continue to influence traders today, and his life serves as an inspiration to anyone looking to achieve greatness, whether in the stock market or elsewhere. Thanks for watching. If you enjoyed this deep dive into financial culture, don't forget to like, share, and subscribe. We'll see you next time as we explore more fascinating stories from the world of finance.